All right. Good morning. How are you? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of me teaching you how to plan your trades in advance. That being said, let me remind you that trading is risky. It's kind of why we plan in the first place. Trading is not appropriate for everyone. Your past performance, good or bad, is never indicative of future results. Therefore, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. Today, we will look at the economic data that came out, but really we'll go through the markets. We'll look at gold, oil, Bitcoin, dollar pairs, yen pairs, and anything else that you would like me to review. I am happy to do so. I consider myself a humble servant to our community. Back when I first started trading, I remember the moment euro dollar went through parity. That means we went from 80 cents to 90 cents. And I remember the exact moment. Oh my goodness. The euro is worth the same as a US dollar. And I'm told that was 2002. And I was well into trading Forex then. So that's kind of interesting. It kind of puts a date on things. I'm like, oh yeah, I remember that. Clearly remember that. So I've been trading Forex since 2002. Interesting. So I've learned a few things. Happy 20-year anniversary, I suppose. So anyways, ask questions and I'm willing to share with you my experiences, good, bad, and ugly. Hopefully, it'll allow you to improve your trading without as much blood, sweat, and tears. I've been doing these webinars and live streams for as long as the technology has been around. I think it was more like 2004 is when I started doing that. So that's only 18 years. And therefore, there are thousands and thousands of videos on YouTube, thousands and thousands and thousands and thousands and thousands of videos that I've uploaded to YouTube, and right, that you can access. They are a resource. What you'll find is when I first started streaming on YouTube, okay, that's a long time ago. Google didn't even own YouTube at that point. And what you'll say, or what you'll notice right away, you're like, oh my God, his charts are basically the same. His trading style and is basically the same, and nothing really has changed. And I'd say, yeah, thank you for noticing that. And the reason for it is there hasn't been a need to have some new cool strategy of the week. So it's a grind, baby. It's a grind. So you can access all those videos on YouTube. If you look at the description below, you will see the links, for example, youtube.com/FXBootcamp, youtube.com/TradersWay, youtube.com/Forex.Today. You'll also see a lot of my work on youtube.com/FXStreet, where I've been conducting monthly webinars for about, 16 and a half years? So anyways, I've been around. Also in the description below, a link to my book, Strategic and Tactical Forex Trading. You will find a link to the FX Bootcamp community. Many, if not most of you, in fact, maybe all of you, are already members of that community, but perhaps you're watching this recording sometime in the future and you're like, man, I like this guy's style. Hey, roll over to fxbootcamp.com, become a member. It's $88 a year. Cool. You'll also find a link to tradersway.com. I find them to be an ethical, trustworthy foreign exchange broker. They earned my respect the day the Swiss bank pulled the plug on their peg to the euro. Some of the largest foreign exchange brokers in the world went out of business that day. Apparently, they were trading against their clients. Traders Way was perfectly fine. And I took that to be that they don't trade against their clients. I'm like, that's awesome. Then you look at the spreads, swaps, execution speed, and you're like, I love this place. So check them out, tradersway.com. Open up a demo account, huh? Codename says, hey, speaking of these videos, are all those pivots averages? And is there an explanation on how to use them, also included in FX Bootcamp? It's 65 hours of training, codename Ren. So Ren's 65 hours. The answer to that is yes, 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 yes. But also in the description below, when you go to youtube.com/fxbootcamp, there's a something called free Forex trading course, and it covers all of that. And you don't even have to pay money. But then again, I would argue, I don't think $88 a year is a lot of money. And I honestly believe the course is worth over $1,000. I think you would find it a ridiculous steal. You're like, this is ridiculous value. So I would just join. Okay. Let's take a look at what you're trading. Oh, I need a few more people to tell me what's going on in your world. Please answer the survey. I think it's just a click. I deserve the most committed Forex coach award. Thank you. I appreciate that. I do. I don't think I'm the smartest person in the world. I don't think I'm the best trader in the world. I don't even think I'm the best coach in the world, but I am a hard worker. So I appreciate that greatly. Thank you. Okay, let's take a look at what you guys are trading. Okay, and euro. You're trading euro. Okay, so we'll do euro. I want to start with oil, however. Okay, cool. Huge rebound yesterday, which is great because as you saw me do live yesterday, I shorted here and I exited here. You're welcome. Now what? Higher high, higher low. I put this line in the sand last week, by the way. So it came down, hit the line in the sand, up, 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 down, down, buy, up, 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 down, down. Well, you do you. In the swing trading group last night, I did discuss for a while the scalping techniques that I use. And one of the things I was very clear about is like, that is a buy. Like, I discussed it for, 20 minutes? Why this would be important? Well, not this particularly, but just in trading, how to set these things up strategically and then tactically how to enter these trades. And you're like, well, Wayne, how did you know this was going to happen? Well, no, that would be part of your fundamental bias. But once it did happen, I talked for 20 minutes on how that would be the entry. Cool. Nice. Great. Cool beans. Cool beans. All right, so I'll leave you to that. Euro, huh? Okay. Let's take a look. Continued consolidation. The sell zone is probably, where are we? 164. Okay. Not quite ready on that one. Getting close. Euro pound, I don't even want to look at it. Euro CAD, let's see. I think maybe the zone around 132 could be a sell. I'm not sure. I'm not sure. It's hard to tell. Okay. So you might want to trap it in, you know, a trap, an inside trap, if you will. You're the best thing about me. Okay. Now, this one is interesting. We have a sell zone above us. The number is 99. No, it's before 99. 98.70. Okay. I'm a bit concerned. We can do that. I'm a bit concerned about the consolidation. But you can see I jammed my stop. Okay. Okay. So, okay, yeah. So you have to fit this into your longer term model. Okay. Definitely time to worry, but definitely not the time to freak out. So we'll see how that goes. I might have to move some stops and make some adjustments. It's Friday. It's Friday, take profit day. So, for example, in euro dollar, okay, we are breaching the 21. That is a red flag, but not the end of the world. Okay? And what I'm still thinking is probably something like this. Okay? Could we go all the way back to parity? Well, I guess we're still at parity, but could we go all the way back up into here? Yeah. Could we go all the way back into here? Yeah, well, you know, again, it comes down to probabilities, but that could happen too. Not likely next week. So right now, I got to play this out. And, you know, as long as we're kind of in that zone, let's move this to darker blue. Okay. As long as we're sort of, I guess that's a better line. I'm still a bear. Okay. So that is still my strategic plan. Yo, the best thing about me. Okay. Norway going nowhere. Euro pound has hit target. Euro CAD trying to open up. Could be a good trading day. It looks like the world waited for retail sales. And now that it's out, now we can get going. Get on with it, right? Okay. China's economy grew at the slowest pace since it was hit by COVID 2 years ago. Uh-oh. Goldman Sachs cut Chinese growth to 3.3%. Whoa, dude. Not good for Australia. We already knew that, though, because we talked about this 2 days ago. But now Goldman Sachs has probably listened to our webinar and then cut their forecast. That's pretty amazing, huh? Another thing going on. Chile intervened in the market today. We don't really trade the Chilean peso. But the way you should look at this is emerging markets are getting crushed, destroyed. Okay? Peso's already topped out for the week, but a perfect little swing trade. And peso is set to go to 21.5 next week. I already got my line drawn and everything. Okay. What do you think about that? Did you hear Mario Draghi resigned? But they said no. Kind of funny, huh? Kashkari, where's he from? Minneapolis, the president of the Minneapolis Fed. I think that's right. He's talking about 4.25% interest rates for a terminal rate. Huh? What do you think about that? That's not priced in. So if they did that, the dollar would have to get stronger. Okay. Interesting. South Africa getting crushed. These moves. Okay. So now countries like Mexico, South Africa, Thailand, if you're trading Thai baht, they all have to raise interest rates. And they have to raise interest rates by more than what the Fed is doing. So imagine there's a possibility of the Fed raising by 1%. Not 0.75, but 1. Then interest rates are going to go very, very high in emerging markets. Well, Denise says, why would they say no? Well, think of it this way. Let's say you're working with your bosses on a really tough project. And you're doing things that are unpopular. But they need to get done. It's sort of like a parent yelling at and punishing and threatening their kids to clean their room. They don't want to clean their room. You don't want to yell at them, but sometimes it needs to get done. And take out the garbage, for crying out sake. How many times do I have to tell you? And pick up after yourself. Put your dishes in the dishwasher, whatever, right? And it's sort of like, I think Draghi's in a situation where he's had to do some unpopular things and people don't like it. And then he's like, well, maybe I should resign. And they're like, don't resign, dude. Okay. Keep being a good daddy. You're not supposed to be popular. I tell my kids all the time, I don't care what you want. I don't care about what you want. I only care about what you need. So you want this and you want that. I'm like, that's irrelevant to me. Right? My concern is what you need. So it's not necessarily the fall guy, but, but they're like, no, you need to keep doing it. Keep going. Don't worry about it, kind of thing. Okay, look at some other dollar pairs. Okay, remember, I think it was Tuesday I was out of all these trades. Short. I had like 10 trades on these, and I got out, you know, I don't know what day this is, but a lot closer to here than where we are now. So anyways, kind of interesting. So you got to like mark your lines here. Okay, and wait your turn. Now, if you're a bull on the US dollar and a bear on Aussie, all this chart tells you is probably not today. So you zip over, right? You zip over to scalping. And you can scalp this all the way up all you want, but what you're really doing is you're waiting for the setup on the higher time frame, be it a 4-hour or be it a daily. So you might be a bear and you're like, yeah, well, maybe when we get around 68, so it's a little higher than now, maybe you start taking it a little more seriously. 68.5 for sure, but probably 68. So, you know, you piss around on a 5-minute chart until you get a rollover. It could be like, for example, and I'm not saying this is the only way of doing it, but let's say you're a bear and this is going up. You don't have to do anything until the 21 crosses below the 55. And then you say, oh, I have technical confirmation of short-term bearishness and into long-term bearishness. So you start to participate in the market again. Or you just chase this around like a dog chasing its tail. Your call. The thing is, it's Friday. Are you thinking next week or are you thinking right now? I'm thinking next week. Okay. Okay. So Japan now owns 70% of their stock market and 50% of their bond market. Good job, Japan. Hey, no one else has done anything close to that. Okay. Wowzer, huh? Yeah, Matrix, I typically this time of year, I'm thinking third week of August, and then I switch over, right? But, you know, this is an unusual year. Okay. So the way I broke this down on Sunday with the day trading group is I said when dollar is strong, I want to sell Aussie dollar. But if there's a period of dollar kind of stops being strong and yen looks to be weak, then it might not be my first choice, but the logic is what I'm trying to get across. Okay, then I buy Aussie yen. And I don't really want to do both. I want to separate them because normally this time of year, if dollar's strong, yen is strong, and I would be selling Aussie dollar and Aussie yen. However, I'm talking earlier in the week, on Sunday. Okay, so like for example, on Sunday, Aussie yen was coming down, but I wasn't selling Aussie yen. I was selling Aussie dollar. Then by Tuesday afternoon, Tuesday night, I had already gotten out of more than half of my dollar trades, re-entered dollar trades, and then exited dollar trades. So by Tuesday afternoon, I was kind of done. Wednesday, I basically didn't trade anything but oil. And then, but the logic that I shared on Sunday is like when the dollar strong is over, then you might want to look towards this because money is leaving Japan. The only fear is yield curve control and all of a sudden, you get volatility. Okay, but the strategical logic was, when dollar strong, sell Aussie dollar, and then when dollar's not strong, flip over and look at Aussie yen, and that might be up. Codename says, what will happen if Japan buys everything? Well, they'll have to find something else to buy. Japan is playing the game that inflation is transitory. And you got to remember, they tried for 30 years to create inflation. So they're perfectly okay with it, knowing that so for example, yield curve control, if you go to the website, and I've only told you guys 100 times to go to the website. Boot campers do go to the Bank of Japan website. Okay? And you look up what yield curve control is. It's on the homepage. They explain what it is, and they describe it as quantitative and qualitative. Quantitative easing. Qualitative and quantitative. And what they're trying to say here is they have inflation, but there's two types of inflation, good inflation and bad inflation. They want the good inflation, and they're going to continue, as they have been for 30 years, trying to create good inflation. And if the rest of the world has screwed up over COVID to create bad inflation, it will piggyback as best as it can to let all inflation go up, so that they, along with the bad, they have good. And the theory is when the bad inflation goes away, which is the supply side, then they'll be left with just the good. But in the past, they couldn't get any kind of inflation. So they're like, So they're dealing with it differently because they have different problems. Okay? They have demographic problems, and the United States is getting there pretty quickly. And what I mean by demographic is the average age. So America is getting old quickly. The baby boomers are getting old and retiring. And so all the sissies are running the country. All the crybabies. Hey, that's all right, because when the hippies ran the country, okay, so now we went from hippies to sissies. Great. But nonetheless, the average age is getting high. And that means the cost of maintaining an old person is high. Their productivity is quite low. Okay? Let me put it into context. In the United States of America, the average age of a farmer is 58. I think in 10 years, we're going to have a massive shortage of farmers, because farming's hard and you don't want to be doing it at 68. We may only have 5, 6, 7 years of farmers left, and all of a sudden we're going to have a massive shortage. So that causes problems, right? In Japan's very, when you look at the average age of the working, the average working age and stuff, the average age is very high. And this has been a prolonged problem, and this is why Japan was the first to essentially go to automation and robotics and all that kind of stuff, because there's a shortage of workers moving to Japan. It's actually very difficult to move to Japan. And when you get there, most people don't speak Japanese when they move to Japan, and people in Japan don't speak anything else. When you travel to other parts of the world, usually you can find someone that speaks English. It's not a problem. It's difficult in Japan. They speak Japanese. So it's right. There's no easy solution. In the United States, we crave cheap labor, but then we harass people at the border. So it's going to become a bigger and bigger problem as time goes by, because Americans get more and more expensive as we age. Okay. When you're a kid, what do you have? You pay rent on a tiny little apartment, and maybe you have a school loan, and the rest is just booze. Then you get older and you buy your first place. But why? Because you got a job raise and you're doing more important things. And then you find somebody beautiful who happens to find you beautiful too. And you're like, let's have a kid. Then you have to get a bigger house. And you have another kid. Now you got to get a bigger house. And then pretty soon you're 50 and you're maintaining a palace and your kids go away, right? And so you just get more and more expensive. When you have a young workforce, so you go to Vietnam, right, where the average age of the workforce is something like 31. It might even be lower than that, 27. You got lots of workers. They're very productive. They're very excited about the future. And relative to an old person, they're cheap. So it matters when it comes to economics. So right now, Japan is looking at what they need to do. And they need economic growth. They need inflation. And to get that, right, a weak currency. Okay. They have to manage it, but on the long run, they're probably okay with things. Okay. Is there a primer to red and green boxes? Yes, they're called pivot points. In the description below the video, Sam, there's a link that says free Forex trading course. Click on the link. The best thing you should do is join FX Bootcamp for $88 a year, and you will be an expert. So when looking at this chart for Aussie yen, if you're a bear, let's just say you're a bear because I can see it, it's easy, right? This is your bearish target. Oops, bearish target. If you're a bear, it doesn't tell you to be a bear. Okay, and that's for the month of July. And you knew this actually in June. So in June, you could have been preparing for a trade like this. Doesn't mean it'll work out that way, but okay, it's a strategic tool. Now the other ones, the pink boxes, and right, because I'm looking at this gray zone. Okay, it's to a green box, but I just do gray because I know it's green. And now these other colors, they're weekly targets. That's a bullish weekly target, and that's a bearish weekly target. Now you're going to say, why are they flipped around? Shouldn't this one be green if you're going there? Shouldn't this one be red if you're going there? No. They're not colored based on what you should do when you get there. They're colored, right? It's more like red means down. And if bulls take profit here, it'll come down. If bears bring it down to here and take profit, then it's going to go up. So they're telling you when you get here, it's probably, the probability of down is increased exponentially. The probability of going up is increased exponentially. And you're like, well, wouldn't that be a buy zone? No. It's a profit zone, because profit taking is not the same as people entering positions. So they take profit here, and then it goes up, and then the next day or the next week or the next month, depending on what you're measuring, the trend takes over again. Okay? Now you'll say, well, that didn't work out well here. Well, we lack a fundamental trend. Aussie's actually quite weak, and yen is quite weak. So you get this kind of move. Okay? But one of the things we've discussed in the day trading group and then and in the swing trading group is if you're a buyer down here, your target, not based on this, okay, not based on this top, but based on this line is there. That's what you were planning 2.5 weeks ago if you were a bull. And you bought there, and you see it hit right on the open, and then we double bottomed there. So in here, you could be a buyer here, And you'd say, oh, well, we're on our way to, 96 and a half. And you're like, well, what an amazing coincidence. Well, this math is looking at highs and lows and closes, and so it knows it's there. That's why this is resistance 1. It looked at the high, so it knows where the high is. Okay? It knows where the low of that period was, so we got that marked too. So if we lack trend, we call it an inside month, and your trade plan would be this. If we have trend, okay, then your targets are quite different, down there, depending on the direction of the trend. Okay. But if you want more detailed, take the free course or pay the $88 to become an expert in day trading, in swing trading, in monetary policy, in macroeconomics, in trader psychology, in price action, in all the different indicators, even an Andrews pitchfork if you want that. It's all there, man. Okay. So anyways, yield curve control. Okay. We were talking about CAD being weak recently over the drop in oil, and I'm like, yeah, I know. I'm a bull on CAD. Nice, huh? Now we got this kind of going now. Luflitulumum. Okay? So with these green boxes, you'll notice there's no pink boxes. The reason for that is this is set up for day trading. So this is a tool that the day traders use in the day trading group. Okay? And you're looking for things like double bottoms on central pivot clusters. And after that, you get the up, 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 down, down, buy, up, up, up. Oh, there's the target. Not the daily target, the weekly target. If you bought here on the double bottom, the weekly target, or sorry, the daily target is right there. Okay. If you bought in here, the daily target's right here. And if you bought here this morning, your target's actually pretty big because of the amount of volatility we had yesterday. So if you had bought here at the London Open, your target for CAD Yen today is somewhere between 107.22 to 107.68. If you're using the tool properly, it'll tell you the first one is probable. It can go as high as it wants, but based on your entry, the target is likely here. And so it's labeled profit target conservative. So that would be the day trade. Yo, the best thing about me. All right. So anyways, that's cool, right? Cool beans. So what did you think about retail sales? Well, what I care about is this. I'm a Forex trader. So this came out today too. Everyone's looking at retail sales. Why don't we already know retail sales? Gasoline prices a month ago were at $5.50 here in Georgia. Cost me over $100 to fill up the Porsche. So then what? But we know they've come down since then. So retail sales will be down next month. It's not complicated. So what do I care about? Import-export prices. When we import, we export the dollar. When we export, we import the dollar. Okay? So I wanted to bust this down. Okay? Import prices are up. I want the yearly one now. Where is this one? 0.4 in April. Smallest increase. There we go. Prices for U.S. imports went up 11%. Imports. Sounds terrible, right? This is money spent. This is the stuff that America buys went up 11%. That's huge. But compared to what? What do we care about? We care about growth, if you will. So you got to now go to exports. Okay. U.S. export prices went up 18%. So think of it this way. You're so good at your job, you made 20% more money this year than last year. And your spending increased, because now you're richer, by 10%. You make 20% more money than you used to, but you spend 10% more. You have excess. Because this is a selling stuff. And it's not just high commodity prices anymore, because they crashed. Higher non-agricultural prices in June more than offset these lower agriculture prices. So we made 20% more money and spent 10% more. We're still better off. What does this mean? When we export, we sell the dollar. When we import, foreigners buy the dollar. The dollar is stronger than it otherwise normally would in this scenario. But the only thing the media wants to talk about today is retail sales and the University of Michigan sentiment survey. Who cares? One is old data, the other one is irrelevant data, in my humble opinion. What I focus on is, where's the money going? Okay. So there you go. That's a morning in the life of a foreign exchange trader. That's what the Forex trader do. Yen's weak. Dollar's giving back in my humble opinion, on profit taking. Pound is getting crushed. You're killing it, right? Okay. Pound Kiwi, down. Pound CAD, down. Pound Swissy, yeah. Pound Aussie, down. And I'm a bear. Abdullah, 400 pips a month, that should be easy. I'd like you to make at least 1,000 pips a month. Okay. Okay. I had an oil trade yesterday that made 400 pips. Is it possible? Oh, totally. So one of the things I used to do and we don't do it anymore, but there are probably a few people here. How many people on the Live FX Bootcamp site, how many people took the challenge where I ask you to make 10,000 pips in 1 month? How many people completed the 10,000 pip challenge in 1 month? Anybody? I honestly don't know. And by the way, and if you did, how many pips did you make? Maida? See, I have to break your mindset. I have to break your mindset. Maida made 19,000. She probably thought it was a ridiculous challenge. So I have to break the mold to get people to listen. It's a Friday. Most people aren't around today, I guess. Yeah. Yeah. Now, of course, you wouldn't be able to do it every month, but the thing is, it's possible. Yeah, it was not real money. It was training, but it was real data. It was a real market. No one else here today? Okay. I thought more people. I thought we'd have 5 or 6 people here today than it has. But anyway, so it's not designed to say this is what you should be doing. But it is a training exercise to show you what can be done under certain circumstances. But you have to have behind the market. Remember, the market determines how many pips you make. Dwayne said he also made about 19,000. Okay. Okay. The market determines how much money you make. You always have to do that. Okay. What the market will give, the market will take. But when the market conditions are right and you have the proper trading strategy, okay, that it can be done. It can be, but under the right environment or in the right conditions, it can be done if you're trading properly, which means your real simple things like letting your winners run and compounding on your winners. What I sense in the Forex market and what you guys tell me about other YouTubers, they put giant trades and pull out small winners. And I must say, in my humble opinion, that is not the right way to trade. You're not likely to make a lot of pips. It's a lot of work too, by the way. But the thing is, if you put yourself in a position to make a lot of money on one trade, you put yourself in a high risk of losing a lot of money on one trade. And I think that is foolish. I think it's wrong. I think it's dangerous. And I mean, I'm absolutely, totally against it in every way. It's not correct and it's dangerous if you're watching people like that on YouTube. Okay? It's just wrong, flat out wrong. That's not even in my humble opinion anymore. I 100% believe it's the wrong way to trade. Because you never want to put yourself in a position to lose a lot of money. It's just wrong. So I have to teach you what we all know to be universal truths of trading. Keep your losses small. Let your winners run. And I have to then teach you how to do that, which is not rocket surgery. But then you need this example where I put you in a beautiful market and you've been trained on how to do your analysis. You've been trained on how to let your winners run and compound on your winners. And then I put you in the perfect market and you just learned the right type of trading strategy and I let you loose and I'm like, you have to make at least 10,000 pips here or you just don't know what the heck you're doing. And people are like, that's insane. And all of a sudden they're like, oh my God, they make a lot more because they've never tried to let the winner run. But we all know the universal truths. Keep your small losses, let your winners run, buy low, sell high. And yet people sell low. I don't get it, but you get situations where you get a big red candle and people sell down here. I'm like, but that's low. I don't understand. You sell high, but not low. Okay? So these are just universal truths. And I'm not pitching this idea that you're going to get filthy, stinking rich and that Forex is easy. And if you just follow Wayne's way, you're going to have so many pips, you'll be drowning. No. That's not the point. But I do have to shatter your point of view of lots of pissy little trades. Instead, build up positions and let it run and mature. And you enjoy things like compound interest and stuff. Okay? Okay. The next question would be, well, then, have I ever had a 10,000 pip month with real money? Yes. Not this year. But yeah. When the market is in the right, when you have the right market conditions. Yes. Yeah. This year is a more challenging market, for sure. But next year will be different. The year after will be different. Okay. Cool. Oh, this is my coaching account. All right. Yeah, nothing's happened on those two trades over the last 24 hours. All right. So that's it. I'm spent. I want the weekend to be here. I'm going to sit. I ran out of coffee. I can't believe I didn't reorder. Hopefully I can get coffee by Monday. I'm going to try to scrounge around. Maybe upstairs there's some coffee. I'm going to sit outside. I'm probably going to scalp oil today. I'm going to watch some of the trades set up for later. You, Mitch, is out. Yeah. Here comes you, Mitch. Okay. Sam says, if I were to join your course, I'll definitely need a lot of coaching. I don't think you're going to waste $88, Sam. I honestly don't. Okay. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend, everybody.